watching what the environmentalists are going to focus on, comparing that to what US and European and Chinese governments are doing in the form of subsidies, and then trying to figure out where in the supply chains are we going to see bottlenecks, who owns those bottlenecks, and will therefore have pricing power, and then position portfolios accordingly.
Hello everyone, I'm Giorgio Tavazza and you're watching Avanguardia Investment Media. Today we are joined by Doomberg to talk about energy, finance, and the economy. Doomberg, thanks for being here.
Giorgio, thanks for having me. It's great. Looking forward to a great discussion.
Great. So let's jump into it. As we are starting the new year, what is your outlook for financial markets and the economy for 2023?
I think financial markets are still waiting for the famous Fed pivot, which does not seem to be coming anytime soon. Recent macroeconomic data in the US would seem to be supportive of continued Fed tightening. And so as long as the Fed continues tightening, then the economy will probably begin to struggle, although we will see with a very important inflation print just how things go, with inflation seemingly coming down a little bit, at least closer to the Fed's goals.
As you know, energy is life. That's your motto and your slogan. And so last year, the energy trade was obviously the right one to have in the portfolio. Do you think that the energy trade is still valid in 2023?
So I would say that energy is difficult to trade because the primary energy products are highly inelastic, which means subtle changes in the weather, like we've seen in Europe, can cause wild price swings that are very difficult for an investor to properly model and to invest intelligently. I would say, again, much depends on the weather. Luckily for Europe, and you're based in Europe yourself, so you would know this firsthand, it has been an extremely mild winter, which thankfully has allowed Europeans to get their energy act in order. And it looks like they're going to have a pretty reasonable 2022-2023 winter. Much depends, of course, on how January evolves and how February evolves. And then they get to do it again next year. The flows in energy are difficult to model. So, you have China reopening, which is very bullish for energy, at least in theory. You have US production seemingly slowed and or topping and certainly not increasing measurably, which is also bullish for energy. But you have the economy contracting. And if you look at the industrial output of, say, Germany, you have reason to believe that maybe less oil will be consumed. And so when you add it all up, I'd say still relatively bullish oil. Natural gas is a little more volatile and more difficult to trade. And natural gas depends much more heavily on the weather than oil does.
Right. And so you mentioned two things that I wanted to dive deeper. So you mentioned China and you mentioned Europe. Let's start with China. So in recent weeks, they have done a complete 180 with their COVID policy, and now they are reopening fully, and the PBOC is injecting liquidity. How much important is the Chinese reopening, and could it have a meaningful impact on oil prices and therefore inflation, which then could have an impact on how the Fed would respond to a higher inflation print later this year, maybe?
Yeah, so I would start off by saying that any Western analyst who claims they have a deep understanding of the inner workings of the Chinese Communist Party should be viewed with some suspicion. There are certainly a few. We are not among them. We have our views, we have our contacts in China, we have our opinions, but it is very difficult for a Western analyst to truly understand what's going on in China, and certainly the inner workings of the CCP. Having said that, the 180 has been pronounced, and we have many contacts in China, and we were hearing news early that it was literally a bit flip. It went from 0 to 1 practically overnight. And we heard reports early that upwards of 70 to 80% of people in Shanghai and Beijing and other major cities were in fact infected with COVID. And we view that as actually sort of short-term bearish for supply chains as people are sick and missing work, but long-term incredibly bullish, because I think once they get through, and already we're seeing early reports from people we respect that cases have peaked and we're on the other side of the crisis. And once you're on the other side of that crisis and everybody has been infected and they have, perhaps some natural immunity, and it's not a total calamity, then you would see a very rapid reopening. And already we're seeing signs of accommodative monetary policy out of the Communist Party. And so I do think this does set up for a bit of head fake on inflation. The numbers out this morning were pretty good, in line, and US President Biden scheduled a press conference to brag about the data, and so you knew it had to be good in ahead of the announcement. And so, yeah, I think we would be perhaps getting a little comfortable on inflation just as Chinese demand and the economy reopens. And we have the playbook. We know how Western economies behave when they reopened, and China was locked down for a lot longer than we were. And so you could imagine an amplified version of our reopening occurring in China. And in that case, we do think it would be quite inflationary.
Nice. And so now you mentioned Europe, and as you mentioned, the weather has been incredibly warm, and I felt it in first person because I live in Europe, and it helped reduce the gas price substantially. At the same time, it helped the euro currency, which in the past month has rallied against the dollar. Is Europe out of the woods, or meaning did they avoid all the major problems thanks to the warmer weather, or are there still risks ahead?
So we have to take a step back and realize what Europe did in order to prepare for the winter. First thing they did was they acquired every BTU of energy they could get their hands on, regardless of price or carbon footprint. So for significant periods of time in Germany, coal was the #1 source of primary energy in the economy, which is amazing, considering how much money they have spent on diversifying away from coal. They did a miraculous job of bringing back on, I believe it was 16 gigawatts of coal production in record time, and also bought every cargo of liquefied natural gas that the world had to offer, leading to shortages in Asia and other countries that depend on the fuel for their own needs. And Germany alone spent over $500 billion getting ready for this winter. Now, they have been blessed by good weather, and thankfully so. I would ask you, is squandering $500 billion, which as we have written, could have paid for an entire generation's worth of state-of-the-art nuclear power that would last 100 years, if squandering that amount of money to get through one winter and then needing the luck of the weather to do it, is that some kind of a victory? Look, we are all for it, but we should not make light of how we got here, and also recognize that we have at least one more winter to go. We would say, and markets are pricing, that the crisis will be fully passed after next winter. They have one more winter to go. They have to do this all over again. Maybe the weather will not be so kind. We hope it will be, to be very clear. The danger is that the Europeans learn all of the wrong lessons from this event, having wasted generations worth of energy investments on 1 year's worth of coal, natural gas, and oil. If they pat themselves on the back for thinking that their policy was the correct one and the prudent one, and they double down on their crazy policies, they will have learned all the wrong lessons. And eventually, if you roll the dice enough times, you get snake eyes and the weather doesn't cooperate. And so we shall see. I certainly hope that they get through this year. As each day passes that it is statistically warmer than historical averages, worst case scenario risks are being taken off the board, and we should all celebrate that.
Right. Yeah, we are all thankful about the warmer weather. Now, I have to ask you about opportunities. Is there something that you think the market is not pricing correctly at the moment? Where do you see opportunities?
So we actually did a piece based on some trends in the US and, of course, in Europe and China as well. And this might seem a little into the weeds, but actually we called early on in January that heat pumps would be the environmental words of the year. And we would see an enormous propaganda campaign on the elimination of the home furnace, especially in the US. And we wrote a whole piece on the topic outlining who we thought the economic winners would be, starting off with a bit of a joke that furnace repair people would be big winners because people will be working hard to keep their furnaces online for as long as possible. But in all reality, if you look at HVAC companies, people who operate in the refrigerants market, and private equity is making huge plays into this space. So what we try to do for our subscribers at doomberg.substack.com is we try to get ahead of these trends, look for patterns, and then people can position themselves accordingly in their own portfolios. And one of the biggest trends is watching what the environmentalists are going to focus on, comparing that to what US and European and Chinese governments are doing in the form of subsidies, and then trying to figure out where in the supply chains are we going to see bottlenecks, who owns those bottlenecks, and will therefore have pricing power, and then position portfolios accordingly. And so we use the HVAC example as just sort of a specific case study in analyzing for constraints, recognizing that government puts their thumb on the scale in the economy, accepting that fact, and positioning yourself accordingly.
Nice. Now, you mentioned uranium, and you mentioned, I mean, you didn't mention uranium, but you mentioned nuclear power when you talked about Germany. So I want to dive into the uranium space. What is your outlook for the sector, both in the short term and the long term?
I think we're in the beginning, early stages of a secular bull market in uranium and in the nuclear sector. We have said repeatedly, and I think more and more people are coming to realize, especially observing what Europe had to do for this winter, that there is no path to substantial decarbonization of the economy that does not drive right through nuclear power. Now, the old school, hardcore, progressive environmentalists will continue to invent reasons why we should not deploy nuclear power, because it is the solution, of course. But more and more people in the middle, the reasonable middle, are coming to the understanding that we cannot break our addiction to fossil fuels and only rely on renewables that are intermittent. You just cannot operate a modern grid that way. Everywhere it's been tried, it has failed. Just ask Germany. Again, operating one of the brownest grids in Europe and one of the most expensive grids in the world as a consequence of their energy policies, and proactively shutting down their nuclear power plants. Imagine where Germany would be even with this warm weather if it had shut down its last 3 remaining nuclear power plants, as the German Greens had wanted to do. So we believe that in the long term, we are very bullish nuclear power. China has something like 150 nuclear reactors in various stages of design and construction. India is making a big move. Japan, of course, is re-embracing nuclear power despite the consequences of Fukushima. California kept Diablo Canyon open. Canada kept Pickering nuclear power open. We'll see what the Germans do. The only country dumber than Germany so far has been Belgium, which seems hell-bent on shutting down perfectly operable nuclear power plants. But we shall see. But we are secular bulls in the uranium space for sure.
And if someone wants to get exposure to the uranium sector and higher uranium prices, how could they do that?
So we don't really give investment advice, but there's a few sort of diversified ETFs that an investor could consider. If you want direct exposure to spot uranium, of course, there's the Sprott Physical Uranium Trust, but you should realize that that is a closed-end fund, and without the ability to redeem, such funds typically trade at discounts to their net asset value, or NAV, and that is a risk to that investment. If you want a diversified set of uranium miners that also has an allocation to Sprott Physical Uranium Trust, there's the URNM ETF, I believe it is called, which is also now run by Sprott. That's a little bit of a less risky bet in the sense that that those funds are in fact not closed-end, and therefore they sell at their actual NAV, and you get a diversified basket of uranium miners, so you don't have like specific company risk. Once you drill down to individual companies in the mining sector, you have all kinds of risks and potential higher rewards. You know, there's a lot of junior mining scams and frauds in the space that you have to be worrisome about, but at the same time, there's also occasionally a vastly underpriced excellent resource that if you could get in at the right price, then you could make disproportionate returns. But it really comes down to your viewers' individual portfolios, their risk tolerances, and of course they should seek financial advice before making any investment decisions.
Sure. So Doomberg, thank you so much for taking the time to be here today. It's been very interesting, and I look forward to see what the 2023 will bring us in terms of energy. As we close, where should people go to learn more about you and the work you do?
Yeah, all of our work can be found at doomberg.substack.com. We are the #1 finance Substack in the world, which is amazing and thrilling and humbling and gratifying all at the same time. We publish 6 to 8 pieces per month on energy and finance and the economy at large. We are a very small team, and we are 100% supported by subscribers, which means we do not accept advertising or sponsorships, which means we have complete editorial freedom to express our views, as provocative as they might be. But it is the work of our lives. We're having a real blast doing it and really appreciate the opportunity to come on. Congratulations on your success and best of luck in 2023. I'm sure you're going to do amazing things.
Thank you.